Hey, good evening, guys. It's 8:45 p.m. on Friday, April 5th, 2019. Hope you all had a fantastic week and look forward to a good weekend and kind of refresh, reset. I always take the weekend to, yeah, I go into my trade journal and my MetaTrader 4 account and I print out my all my trades for the week, wins, losses, good, bad, and I draw them back on my chart and I look for things I did right and things I did wrong, and I take notes and I try to learn. Uh, I may take some screenshots, put some things into some folders, but either way, I try to um, just really be reflective of my week, whether it was good or bad. And not just the good trades, but the bad trades. And not just the bad trades, but the good trades, right? Psychologically, you can't just say, well, I just want to look at all the losses and figure out why I made losses. Well, that's important, but it's just as important to understand why you had wins too, especially if you were disciplined and followed whatever system you use, and you can see the patterns in terms of your success or failure. I think it's very important, and I had some revealing things this week for me that I'll just share with you briefly. Before I do that, though, I wanted to tell you something else that I'm doing on a demo account, and I do not recommend you do this with real money. Just kind of like a fun little experiment that I'm doing on a demo account. So I have shown you guys this particular page before. This is on myfxbook.com. If you go to myfxbook.com and you um, search community, you go to myfxbook.com /community/outlook. Okay, maybe I'll put the link under this video. Um, you will find this page, and I did a video a couple weeks back that talked about this a little bit. And what this is, guys, this is the net long or short position of all the retail trading accounts, live accounts on MyFXBook. Now, a lot of individual brokers have this data too for their own traders, for their own clients. And I use Oanda for my live account, and they have something similar. But I like this one better because for two reasons. One, it has more pairs as options. And also, this encapsulates anyone on MyFXBook. So it's going to pick up a lot more traders from a lot more diverse backgrounds, different platforms, different brokers, just different traders. So, but I did find the percentages are not all that different than what MyFXBook shows. Um, there is another one too, but again, they don't show. There's one on DailyFX's website, but it doesn't show very many pairs. That's this one right here. I'll show you really quick. If you go to dailyfx.com and you have to go to their intraday IG client sentiment, it's a free link on their page. You just have to find it. And they change this up every day. And you can go in here. It's just a little bit more complicated. They got all these fancy graphs. But like for Euro, it'll tell you, retail traders are 73% net long. So you know that, so if I go back to Community Outlook, they got it at 74. So it's almost the same, right? Here it's 73.3. Here it's at 74. So that's why I said they're pretty close. I just like this one better because it's easier to look at, and it's got a lot more traders being captured here, and from a lot of different brokers and backgrounds. So, anyways, myfxbook.com /community/outlook. Okay, and you'll find this. Now you can filter if you click this little more button right here. You can see all the different instruments. So there's a lot of other stuff here. So when you initially click on it, you're going to get everything, all these pairs, and there's even some indexes and things, stock indexes and things, commodities. Cocoa, coffee, you got German 30, the NASDAQ. So obviously, I don't care about any of that. So I just go through here and uncheck everything except the pairs that I follow. Okay. So you'll have to do that unless you want to scroll through a lot of junk. But in the end, this is what you'll get. And you can see it doesn't take very far to scroll up and down. And so basically, again, how you read this is You just hover over any pair and it'll tell you, as you can see here, the net longs are 74% and the shorts are 26%. And so it basically means of all the accounts they're looking at, that people that are trading the euro, 74% are long, 26% are short. Now, I look for an extreme of at least 70% before I care about any of these numbers. So some people I've heard want to do 75%. I think 70 is a more generous number, but if you want to be more conservative, you can say 75%. But whatever it is, I say 70%. And I don't care about the other stats. I don't really care about any of this stuff over here. This is really, honestly, all I'm looking at is right here, okay? And what's in this black box, all right? And you can see there are 91,000 net long positions and 47,296 shorts. That's a lot of contracts. That means 140 plus thousand contracts this is looking at, and a lot of lots. 30, almost 35,000 lots of long and 12,000 lots short. Full standard lots. So, like I said, it's a very wide. It's a very wide look. So anyway, so I go through here, and so again, you got euro dollar 74% long. The pound dollar 72% long. So those would be extremes. And look at this, U.S. yen 70. Hold on. 96% short in the U.S. yen. I mean, so this is a super duper extreme, 96% short. And so you can just kind of go down the list. So this one here, like pound yen, I wouldn't look at because it's only 63%. This is one that's under 70. I don't care about that. There's one I wanted to point out. Let me find Aussie Kiwi. I know it's here, and I tend to just go right past it sometimes. Sorry. Oh, here it is. Okay. So if you watch the video I did on this, maybe 2 weeks back, this traders on the Aussie Kiwi were literally 98% long. Okay. So the just about all this bar was covered except for this last little piece, right? 98% long, only 2% short. Now you can see what's happened. It's swung all the way back almost the other way. Now it's 74% short, only 26% long. Like I said, a couple of weeks ago, it was like 98% long. So traders have completely gone back the other way. Now I want to point out, and the reason why I'm just telling you guys all this is because normally retail traders are on the wrong side of the market. Okay, that's why 95%, whatever the statistic is, say that they lose because they're normally on the wrong side. And so because they're either trying to pick a top or a bottom, they think they're being clever. The market's going down, 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 and they start going net long. So instead of just respecting the longer term trend, they think they're going to be smart, and they're going to try to jump the shark and take the market the other way, and they're going to look like heroes when they get on board and the market turns around, goes the other way, and they look like they knew what they were doing, when actually they probably just got lucky. And so that is the reason why you look at this, because you want to basically be a contrarian trader. So in other words, in this case, if the market, if the vast majority or over 70% are short, then you probably want to think that the pair is going to start trading up, because, like I said, the crowd is usually wrong. The retail traders are usually wrong. And the reason why I'm showing you Aussie Kiwi being like this is, and keep in mind, like I said, up to just recently, it was like 98% long. Well, let's look at the Aussie Kiwi chart, shall we? So here's the Aussie Kiwi short, and let's go to the daily. Now, for the longest time, remember what I said, 98% of the traders were long this market. Well, it has been going down since last August. We have this peak. August 10th of last year, this pair started trading down, and it has not looked back until about a week ago. March 26th, we put in this low, and now we've been going up. Well, what do you know? So everybody was all this time heavily net long, thinking they're going to catch the bottom. Now, of course, 95% of those traders got killed. Now, maybe on a shorter time frame, somebody traded this correction up, made some pips. If you're a scalper, maybe you made some money in it. But if you're a trend trader and you're, a swing trader, position trader, you got killed. Okay, and that's just a fact. Now, you've seen what happened since, like I said, for about the last week. So traders finally throw in the towel at some point and say, all right, this thing is going down, and they get out of the longs and go short. And so, of course, that's what they did. They went from being almost entirely net long to now being heavily net short. And lo and behold, what does the market do? It turns around and starts going up. Okay? And just clear this chart up a little bit. And so this is what happens. And so probably right around here, when the traders finally threw in the towel on their shorts, on their net long positions, said, all right, market's going down, we're going to take a short. Let's all switch to short. And lo and behold, as soon as they do that, the big banks and the investment houses tap that liquidity and they take it the other way. So that is contrarian trading at its best. And this is a perfect textbook example. And you can do that pretty much on any of these pairs if you have been watching the history. And I only know because the Aussie Kiwi was the most out of whack one that I've been following. And then when I checked this a couple of days ago and I saw this, I just laughed because I said, here we go, right? Everybody went from being almost entirely net long to now heavily net short. And as soon as they do that, the market starts rallying. Okay. So the reason why I'm telling you that, guys, is because what I did, I'm doing a little experiment, and I'm doing this on a demo account. I'll tell you that right now. Okay. All right. I took, what I did is I went through this list and I wrote down every pair that was at least 70% one direction or the other. Okay. I just took a piece of paper and I just went through here. So that would have included the euro and the pound dollar and et cetera, et cetera. I wrote them all down. I went to my demo account and I just took trades. I just jumped in. I didn't care where it was on the chart. This is a demo account, by the way. So as I said, so I don't really care. There's no real money here. You can see I just took, tiny little lot. It really doesn't matter. It's a demo account. And I just jumped in. So this is the US Swiss. So the US Swiss traders are heavily net short right now. So I took this long. And I'm just going to watch this now. And I'm going to see. I'm going to watch it probably for maybe a week. I'm just going to let these trades run. I did put stop losses just, so I don't get too crazy. It's a demo. It doesn't matter. But, whatever. I don't want to zero out my demo account and then have to ask for another one. So I'm just going to let all these run. And you can see I took euro dollar, pound dollar, US yen, US CAD, euro yen, Aussie CAD, Aussie Kiwi, US Swiss. Those are all the ones that were at least 70%. And I did this very late in the day today, probably an hour before the market closed. So you really can't go by any of these numbers. Obviously, I took those trades at a time of day I would never trade, but it doesn't matter. I just took them anyways. All right, and that's what I did. And so I'm just going to let these ride, and I want to see what happens in the next week or two, assuming I don't get stopped out. I'm just going to let these things go and see what happens. And it's just a little experiment based on this. And I want to see, if you just took a trade just strictly on this type of news, and again, I would never advise doing that, but I'd just be curious to see, just based on this, how these trades come out over, let's say, a week or two. Long term, who knows? Because this, these numbers can change over time, and they obviously do. They can change every day, but I find they stay pretty stable over the course of, a week or two, and then slowly they'll shift. So I'm going to plan on holding these trades for at least a week, maybe longer, see how they go, and just see how, at the end of the week, how they end up, how many pips. It doesn't matter on the lot size. You see, I took some full lots, some little, one micro lot. So I just want to, at the end of the time, see how many pips, plus or minus. All right, that's really, of course, in the end of the day, that's all you care about is pips, right? And let's see what happens, right? So kind of a fun little experiment. I'll get back to you guys once that's done, and I'll let you know how it turns out. Last really thing quick for next week, just looking ahead, getting back to real trading. Jumping on the calendar here, it's going to be a pretty quiet week news-wise. The highlight of the week will be the euro, main refinancing rate and monetary policy statement, which again, this will be the key, will be the statement. They're not going to change the rate, so it'll be in the statement. And then the press conference that follows 45 minutes later. So that comes in on Wednesday. And also that Wednesday morning in New York time, we have US dollar CPI. This will be important. Okay. The other themes kind of going into, and then we have PPI on Thursday, and then there is OPEC meeting. So this could affect, like, the Canadian dollar, maybe the US dollar, because of course that's all about oil. So watch the Canadian dollar during this time. But the other themes will just continue to me personally, continue to look for places to short the New Zealand dollar based on their new dovish stance that they took the week before this. So I will be looking for kind of more long-term shorts on the Kiwi, especially in light of the fact that there's no Kiwi news to speak of next week. So you're not going to have really any sentiment shifts. So that means, the larger trends are just going to kind of continue. So Kiwi shorts, maybe Aussie longs on some new renewed strength in the Aussie. And if you watch my non-farm payroll and Canadian dollar video I did earlier today, as a follow-up to the employment reports that came out today, which turned out to be nothing burgers because they were very split, mixed results. So the market really didn't do anything. So there really was no trade on any of those reports. I would expect, as I said in that video, for the larger trends in both the US dollar and the Canadian to potentially continue, but we'll see. But again, in terms of fresh news, it's going to be about the euro, US CPI, and continue to watch the New Zealand dollar for shorting opportunities and potentially Canadian trades with oil, and potentially any follow-up from the Canadian dollar employment news, although again, that didn't do anything, so that may just pass in the night and really not have any effect at all. So anyways, guys, so like I said, I'll report back on this in a week or two, and I'll try to do a video regarding the euro after the fact. All right, so we'll see how that all comes in. So thanks, and have a good night. Have a great weekend.